Welcome to Navigating Now, real talk for rocky times. A Pete the Planner Calmcast.
Good day to you. It is 5:29. It's May 29th, 2 p.m. Eastern. And as you know, every Tuesday and Thursday during, for 20 episodes, 10 weeks. I don't know what we did. But anyway, we do this for 10 minutes. We say what has gone on in the economy, in the market during these times. These times are defined post Liberation Day. Liberation Day was April 2nd, and it's when the entire world economy was put upon with President Trump's tariffs as he tried to bring jobs back to the United States and all sorts of other things. We won't get into that. Here's what we're going to get into. What has happened since the last time we spoke on May 27th? A lot. The last 24 hours has been pretty intense, and I'm telling you, I'm glad we're doing this because the next week or so is going to get weirder. Here's what's happened. Market's kind of calm right now because it's waiting to figure out what to do with the information last night. A federal trade court struck down President Trump's reciprocal tariffs. Okay, so that's a significant blow to the strategy that President Trump was putting out there. People didn't know whether to celebrate. They didn't know whether to, people being other countries, businesses, they didn't know what to do with this information because it's so fickle. It's sort of blowing in the wind. You just don't know what's going to happen next. Yet there is a belief that tomorrow, the 30th of May, President Trump could ask the Supreme Court to halt the block. It's like a double negative. If you halt a block, he just wants he wants the tariffs to continue. So that could happen as soon as tomorrow, and the markets will likely react. Beyond that, the Fed chairman, Jerome Powell, told President Trump today that meeting a rate decision of whether they lower the Fed rate will not be based on political things. It will be a non-political analysis. We've sort of known that all along, but he told him directly to his face. So there's that. Expect some reaction from the Trump administration on that. But today we're focusing on three things. So on this show, we're trying to learn three things per episode other than current events. Number one, we're going to talk market cap. What is it? This one will make you seem smarter. Like once you know this, you kind of drop it in conversations and people are like, wow, you must be listening to Navigating Now.
Calmcast.
Next, we're going to talk about the unemployment rate. It's a little different than you think. It's a little bit different than you think. And then, of course, needs and wants. We're not going to spend a lot of time on that. I mean, I want to, but I don't need to, if you will. Let's talk market cap. Okay. Market cap, it is what the market, investors, think a company is worth. And it's quantified with a number. Here's how it works. So you know what a stock is. There are shares of a company, right? And there is a quantifiable, a finite number of stocks, shares per company that's out there, okay? So you take the number of shares and you multiply it by the current share price, and that gives you the market capitalization. It is saying the market, the investors who are investing or not investing in that stock, have created this market in which the company, we think it's worth this. Now, does it mean the company makes a profit? No, it does not mean that. Does it mean it's a good investment? No. Are large market capitalizations better than small? No. So let's dig into that a little bit, and so you can better understand how wildly different these things can be. Let's start with everyone's favorite example, Apple. And I don't mean the fruit that keeps the doctor away. I mean the technology company that occupies my back pocket, Apple computers. And it's not even called a computer anymore. Anywho, there are 14.94 billion shares of Apple in the marketplace. That's the total inventory of shares. Now, the stock is trading at $203.58. And so the total market cap for Apple is $2.979 trillion. That's a lot of money. The market thinks Apple is worth $2.979 trillion. There are just a few trillion-dollar companies in the world, and Apple is one of them. Let's contrast that with something much smaller. For a lunchbox to work today, I'd go grab it, but then you'd just be weird for a second. And it was manufactured by Vera Bradley, the bag manufacturer. It's my wife's, and I brought it in today. Vera Bradley is a much smaller organization. They have 27.92 million shares. It is trading at $2.06 a share. Double checking, $2.05 a share. Got to stay accurate, right? For a market cap of $57 million. Okay? Small company, large company. It's just what the people think it's worth. It doesn't talk about profitability or whether it's a good value. It has nothing to do with that, but it's a way to compare companies. And typically, as an investor, you want a diversified portfolio that takes into account different market capitalizations. So you'd have like a large cap, which would mean very big. And you could do a large cap growth stock or a large cap value stock. You could do a mid cap. You could do a small cap. You could do a micro cap. And arguably, places like Google and Amazon and Apple are mega caps, but we're not quite there with the language yet. Let's talk unemployment rate. You know, there was a while that when you first heard about unemployment rate, in your head, you're like, okay, well, this is a good indication of how things are really going in the employment market. There's a lot of jobs to be had. There's not enough workers, these sorts of things. But here's what the unemployment rate's actually in a really good spot right now. But here's what it doesn't include. People who've stopped looking for work. These are called discouraged workers. Part-time workers who want a full-time job. Those people are called underemployed. So they are not counted in the calculation. And then the people working multiple jobs to replace the income it would take for one. These people are not included in the unemployment rate either. So it's not the most accurate thing in the world. The most shocking thing about the unemployment rate, it's based on a sample, like most data points, most surveys, of around 60,000 households. So, you know, when we sort of fight and tussle and debate the significance of the unemployment rate, it's based on 60,000 households. Another thing worth knowing here is that a more accurate way to look at what's going on in the economy is something called the labor force participation rate. Boy, we're getting deep today. This is like of people who want to work. These are the jobs, right? And so to give you some perspective, the participation rate right now is 62% of people who want to participate are participating. Then you get into what it was in December of 1999. It was 67%. Okay, so that means that we potentially have an aged out population. People are discouraged or they have caregiving obligations. Are people actually participating in the economy? Right now, 62.6% of Americans are participating in the economy. It was near 67% right before the year 2000. Finally, needs and wants. Man, one of the best ways to actually contextualize needs and wants is try to teach it to a kid. You know, we need shelter. We need food, right? We want carry out instead of me making dinner at home, right? And so in what happens as an adult, as your personal financial life just sort of matriculates through time, you tend to lose sight of needs and wants. And mystically, wants turns into needs. And that's how people get themselves in trouble. And it's not unusual. It's not unusual based on whatever income level you might be in. At the top income levels, it happens just as easily. Luxuries turn into obligations. So if you haven't recently, here's a little homework for you. Go down your bank statement. Yeah, that's right. Go down your bank statement. Last 30 days spending, select the needs, select the wants, and see what's next. Next Tuesday on this show, Circuit Breaker, Global Economic Impact and Goal Setting. I'm Pete the Planner.